Good morning, Namaskar, Suprabhat, Sat Sri Akal, Vadakkam, Kem Show to everyone. I welcome you all in our today's session of income from house property. And this would be the last class of income from house property. We will complete this topic in this class with certain test to knowledge questions, MCQs, etc. So I believe that you all must be working really hard to achieve the goal of your life to become a chartered accountant as soon as possible. So in the last session, I have given you one question uh, regarding the pre-construction period and current year interest calculation. And I believe you all must have tried it and of course solved it. So first of all, we will discuss that question. And I have also asked you that there was a note regarding the pre-construction period interest. Let me show you. In which there was a specific provision which says that you should ignore pre-construction period interest if this was the note. No deduction of pre-construction period interest if house is completed on or before 31st March 2021. So first of all, can you tell me what does that mean? Why this date has been mentioned over here that you do not need to calculate pre-construction period interest if your house is completed on or before 31st March 2021. So who will tell me the answer of this point number 4? Good morning, Ketan. Good morning, Sridhar, Isha, Kash, Mehak, Nisha, Vishakha, Omkar, Ketan. So Ketan send the answer of the question we have asked, the example. But first of all, I would like to know that do you understand why this point number 4 or what exactly it wants to explain? Why we cannot claim pre-construction period interest if house is complete on or before 31st March 2021? Anyone want to explain this concept? It's a very simple thing. Mr. Ketan Mehta is saying 5 years calculation cannot be done. Maybe you are right, but your answer is like too short to understand. Okay, so let me tell you the reason behind it. So it says no PPI deduction if property has been completed on or before 31st March 2021. Because the provision we have discussed in the last class that the interest benefit, whether it's regarding current year interest or in respect of pre-construction period interest, you can claim the deduction of interest from the year in which house property completed. Clear? So if your property has been completed up to 31st March 2021, if your property has been completed up to 31st March 2021, and suppose you have taken loan, of course, before this date, suppose loan has been taken in 2019. So you must have calculated your interest of PPI from loan taken till the repayment of loan or 31st March before the house has been completed, whichever is earlier. So if your property has been completed up to 31st March 21, that means the deduction of interest would have been start from year 20-21 because we start the deduction of interest from the year in which property has been completed. So if the question says that property has been completed up to 31st March 21, so you must have calculated your PPI interest, whatever it is, and you will start giving the deduction of PPI interest from the year 20-21. That would be the first year. Then 21-22, 22-23, 23-24, 24-25. So the 1/5 of pre-construction period interest deduction means you will, suppose the pre-construction period interest we have calculated 1 lakh rupees. So the 20,000 out of this 1 lakh must have been claimed in 2021, then 21-22, then 22-23, 23-24, 24-25. So we must have calculated the full deduction of rupees 1 lakh up to 31st March 25. But our previous year is 25-26. So of course, the 5-year benefit of pre-construction period interest has already been taken up to 24-25. So this interest already exhausted completely. No pre-construction interest now required to be deducted from this year. Current year interest could be deducted, but pre-construction period interest, because it has been allowed from the year in which the property completed. So 1/5 deduction every year you must have taken for earlier 5 years. And the previous year 25-26, you would not have any pre-construction period interest left to claim the deduction. So please remember this date, that if in any question the house property has been completed up to 31st March 2021, then it is a universal rule that no PPI required to be calculated or no PPI required to be deducted. Suppose in this question, the question itself give you that the pre-construction period interest is 1 lakh. So do not tempt that, okay, we have the pre-construction period interest given, so let me allow deduction of this pre-construction period 1/5. No, because all 5-year deduction must have been already used. Understood the meaning of this concept? Now I have given you a question, and I believe you must have tried that, and I hope you have solved it also. So can you tell me the answer of this question, what we have discussed in the last class? So you need to give me the answer of point A. The correct answer of point number A, because no loan repay yet. Ketan has been given the answer for current year interest. The correct answer is 1 lakh rupees. And if you calculate, in this case, the pre-construction period interest would also be 1/5, would also be 1 lakh. So Ketan answer is correct. Current year interest would be 1 lakh, as well as the pre-construction period interest would be 1 lakh. Total pre-construction interest would be 5 lakh. But 1/5 deduction we can claim 1 lakh. Now in second case, the current year interest would be how much, student? How much current year interest we can claim in second case? What is the correct answer? What should be the current year interest in case of second case? Ketan has given the answer. The current year interest in the second case would be nil. And why it's so? Because the amount of loan has been already repaid on 1st of August 2024. So for my previous year 25-26, there is no loan left. So because there is no loan outstanding during the current year, so the current year interest would be nil. And the pre-construction period interest, the 1/5 portion would be 86667. Absolutely correct, Ketan. Well done. Now in third case, suppose house property is completed on 31st March 26 and no loan repaid. So in this case, the current year interest would be 1 lakh. And the 1/5 of pre-construction period interest would also be 1 lakh. So for C case, current year and 1/5 both would be 1 lakh, 1 lakh each. For B case, current year would be nil and 1/5 would be 86,667. And in case of A, the current year would be 1 lakh and 1/5 of PPI would also be 1 lakh rupees. So we have solved this question. And I believe you, after try this question, you must have understood how to calculate the current year interest and pre-construction period interest. Now, before starting today's class, of course, we will discuss the thought for the day for today's class. And it says, for that one day, you always must have imagined that one day you will be a chartered accountant, one day you will start earning, one day you will get a car, one day you will travel to the place you wanted to be, one day you will shop, etc., etc. So we all imagine one day we are going to do that for this thing. But let me tell you, for that one day, you have to start working hard from day one. So when there would be a day 1, day 2, day 3, day 4, day 5 of your hard work, of course, at the end, you will get that one day. Whatever you want, whatever you dreamed of, you will get that on that one day. But for that purpose, you have to start with day 1, day 2, day 3, day 4. Okay, so that was thought for the day. Moving on to the provision. Now we have left with the pure numerical part of house property, in which we will see, just a second. In which we will discuss, in this numerical part, we will discuss the 7 different cases. As I have told you that there must be multiple questions in your mind regarding different scenario of house property cases. That what if we let out half portion of our house property and half is self-occupied? What if I have multiple houses? What if a property has been let out, but tenant has not paid the full amount of rent? What if there is a property which is let out for 8 months and self-occupied for 4 months, and it is also vacant? So there are multiple cases that we will discuss one by one. First is case number A. Total 7 different cases we are going to discuss. Case number A. Case number A says, when you have maximum 2 properties, case A and case B, both we will solve together. So we have discussed in the last session that maximum 2 house property, those are self-occupied or vacant. We can take the value as nil. If that is more than 2 house property, the other properties need to be considered as deemed let out, if not actually let out, or not used for your business, etc. So the case A discussed about the scenario in which the assessee is having, case A and B, both treatment is same. So if assessee is having multiple houses, not more than 2, maximum 2 houses, which has been used for self-occupied or vacant or both. Suppose if anyone has 2 house property. So case A and B says, if suppose both are self-occupied, the treatment would be as case A and case B, the same treatment for both cases. Or maybe there is a situation both are vacant, or maybe one self-occupied or one vacant. So technically we are discussing the case in which there are 2 house property and there is no real income from that house property directly or indirectly. So for those cases, the concept says the net annual value. We have discussed the format like gross annual value. First of all, we have to find out, then municipal taxes need to deduct. Then we will have our net annual value. So for maximum 2 properties of assessee, which has been self-occupied, vacant, vice versa, etc. that would be considered as nil always. So two house property is nil. It is nil, not exempted. Remember this. It is nil, not exempted. What is the difference between if these have been exempted, not nil? Because if it has been exempted, then you cannot claim the pre-construction period interest deduction or current year interest deduction from this value. And if you'll not deduct the interest deduction, that would be a loss for you. That would be a disadvantage for you. You will understand why. So the GAV municipal tax is irrelevant. The direct net annual value would be nil. Out of this net annual value, you can reduce. One deduction was 30% standard deduction, which is fixed. So of course, that would also be nil because that 30% is of NAV. And if NAV is nil, automatically this deduction would be nil. So only one deduction you can claim. In case of properties, those are self-occupied or vacant, maximum for two cases. And that deduction is interest. Only interest deduction you can claim out of these properties. Galt is saying, yes, sir, we cannot highlight PPI to carry forward. We will discuss about the carry forward provision also. So the first thing to understand that in case of properties, those are self-occupied, vacant, etc. The annual value would be nil. Deduction of 30% would be nil. But interest deduction you can claim. And this interest deduction claim possible only in case of optional tax regime. If it is a default tax regime, interest is also not allowed. So it's a very good news. That suppose if the question is asking you to solve a question under default tax regime concept and the properties are self-occupied or vacant, the answer would be nil always. No interest deduction allowed, no state deduction, no municipal taxes, nothing. Your answer would be always nil. So this interest benefit only allowed under optional tax regime. If it is a default tax regime question, I will write it down nil. The answer is nil. But in case of optional tax regime, we can claim the deduction of current year interest or 1/5 of pre-construction period interest. The calculation part we have already done in the last session, how to calculate current year interest, how to find out the 1/5 of pre-construction period interest. And the aggregate of this, both, it cannot exceed 30,000 rupees for both properties in aggregate. It's not 30,000 for each property. For both properties, two properties, the maximum interest deduction would be 30,000 rupees or 2 lakh rupees. In some circumstances, it's 30,000. In other, it could be 2 lakh rupees. When 30,000, when 2 lakh, that we will discuss. But in aggregate, maximum 30,000 or 2 lakh rupees you can claim. And that will result in loss. So in case of default tax regime, the answer would be always nil in this case A or case B. In case of optional tax regime, the maximum loss could be 2 lakh rupees because the maximum deduction of interest could be 2 lakh. Now, when it would be 30,000, when it would be 2 lakh rupees. So the provision says that if generally it would be 30,000. But if these two conditions fulfill, then the limit of 30,000 will be increased to 2 lakh rupees. The first condition, the loan taken is on or after 1st April 1999. The loan taken for which you are paying this interest, that must be taken on or after 1st April 1999. So if the loan taken is before 1st April 1999, deduction would be 30,000. So for claim the benefit of higher interest, the loan taken date must be on or after 1st April 1999 and was 1999 or 1998. Just a second. Let me confirm this. 1999. And the second condition needs to be fulfilled also. That house property construction or purchase must have been completed within 5 years from end of financial year loan taken. So this condition says, suppose you have taken a loan on 1st November 2019. So first condition has been fulfilled because the loan has been taken on or after 1st April 99. Now the second condition says the construction should be completed within 5 years from the end of the financial year loan taken. So if you have taken loan on 1st November 19, so end of financial year would be 31st March 20. Then add 5 years. First of all, you need to go at the end of the financial year and then add should have been completed up to 31st March 25. If it has been completed up to 31st March 25, the deduction of interest could be 2 lakh rupees. And suppose the construction has been completed after 31st March 25, that means after 5 years, then the benefit would be restricted to 30,000 rupees. So this 30,000 or 2 lakh rupees option is there for construction and purchase case. If the loan taken for construction or purchase, then there is an option that whether you will be able to claim 30,000 or you would be able to claim 2 lakh rupees. But suppose if loan taken for not for construction but for repairs, renewal, etc. For repair, etc., then the limit would be always 30,000. The 2 lakh advantage is not there if the loan has been taken for repairs, renovation, etc. For purchase construction, it would be 30,000 or 2 lakh depending upon the situation. But for repair, etc., it would be always 30,000. So case A and B only have one calculation of interest because NAV would be nil, deduction standard nil. Interest you need to calculate as per the provision. Keep in your mind, if it is for repair, that would be maximum 30,000. If it is for purchase construction, it would be 30,000 or 2 lakh. 2 lakh would be only when these two conditions has been fulfilled. Aggregate for both houses, the limit is 30,000 and 2 lakh. Okay. So now discuss this concept with the help of provisions. So this is case A and B we are discussing. You can see that annual value of maximum 2 houses can be nil. If self-occupied or vacant, the format would be like this. Annual value direct would be nil. 30% deduction would be nil. Interest deduction maximum 30,000, 2 lakh rupees for both houses in aggregate. Optional tax regime only. That means maximum loss can be 2 lakh. It cannot exceed 2 lakh. The detail has been written over here. You can read it. The same concept we have discussed. You can see in the clarification, it has been written that under default tax regime, no interest deduction would be there. So the answer would be always nil. Under optional, we have option to claim 2 lakh rupees or it would be 30,000. For claiming 2 lakh rupees, two conditions need to be fulfilled, 1499 within 5 years. If the loan has been taken for repair, renewal, etc., then maximum is 30,000. No 2 lakh rupees benefit you can claim. That was case number A and B. It has been explained with the help of a diagram also, which I have been copied from study material. So what is the interest benefit under default tax regime? And you can see if the property is self-occupied, no reduction of interest. The treatment under optional tax regime, if property is self-occupied, interest can be claimed if it is for repair renewal, maximum 30,000. If it is for construction and property has been within 5 years constructed, in that case, 30,000 for maximum 2 properties. If condition not fulfilled, if condition fulfilled, maximum 2 lakh rupees interest can be claimed. The interest limit is not applicable in case of let out or deemed let out property. So only in case of A and B, that means property self-occupied, vacant, when the value is nil, the interest restriction is there. But if the property is let out and deemed let out, then interest can be claimed and there is no as such limit for it. Fine, we will discuss that in case of let out case. Interest allowed on accrual basis. This is a very interesting provision. Even if the interest has been due but not paid by the assessee, you can claim the deduction of interest under income from house property. There are multiple cases like under PGBP also you will see interest deduction benefit under business is only available when it has been paid. But under house property, it has been provided to you even if it has been due. This is regarding the loss treatment. Whatever house property losses, you cannot set it off under default tax regime from any other head of income. But in case of optional tax regime, you can set it off maximum up to 2 lakh. But this is going to be discussed in detail in set off chapter, so you can skip it. Now case number C. A and B we have discussed. Now we will see what is the case number C. So case number C is not technically a solution case. It is just the selection case. It says when you have multiple houses and you are using that multiple houses for multiple purpose. Suppose there is Mr. Ram who is having suppose 8 houses. Just imagine he is having 8 houses. He's a rich person. He's a very rich person. 3, 4, 5, 6, 7, 8 houses. So this is a case of multiple houses. Whenever you have more than 2, 3, 4, 5, 6, 7, 8, etc. houses, case number C will tell you which house is going to be solved as per which case. You understand? Suppose this house is self-occupied. This is also self-occupied. This is vacant. This is actual let out. This is let out and sometime vacant. This house, ground floor, self-occupied, first floor, let out. This is used for his business. He is using this house for his personal business. And suppose this is 7 months let out and 5 months self-occupied. So you have multiple houses. So now case number C is just a selection case. There is no solution criteria. What is C is doing? C is just going to tell you which property is going to be solved according to which case. Now out of you can see these 3 properties, those are vacant and self-occupied. Any 2 need to be solved as per case A or case B. That means any 2 value would be nil and we can solve it as per case A or case B. Annual value nil, deduction will be nil, interest you can claim under optional tax regime, but not under default tax regime. So out of these 3, 2 going to be solved like that, and any 1 that will become deemed let out. And deemed let out case is the next case D. You will see how to solve it as per case number D. So C just going to tell you that, okay, this case is going to be solved as per the provision of these concepts. So any two will be going to be solved as per A and B, and if any other house, which is three houses self-occupied vacant, so one out of these is going to be treated as deemed let out, the solution will tell you as per case number D. Actual let out also going to be solved as per case number D. So D is having all deemed let out cases and actual let out cases. If any property is let out and vacant, then case number F, we will see how to solve it. If any property which is let out and self-occupied, that means one part is let out, one part is self-occupied. So this let out part is going to be solved as per case number D, and this will again become deemed let out. Because you have already taken the benefit of two houses, so all other self-occupied portion would be treated as deemed let out. Now, if you use this property for business, that will not fall under house property. The treatment would be under PGBP. If 7 months let out and 5 months self-occupied, that is also going to be treated as case number G. That is the case number G we will discuss. So out of 7 cases, as I've told you, there are 7 circumstances. Case number A, B, C, D, E, F, G. Out of these 7 cases, we have discussed the solution of A and B. C is not a solution case. It is just a selection case. It just tells you which kind of house is going to be solved in which way. So now we have left with D, E, F, and G. 4 cases. And D is very, very important and interesting. The format we have discussed earlier. Gopal Krishnan is asking, sir, what about property tax deduction? It's not allowed when self-occupied. Yes, Mr. Gopal Krishnan. If it is self-occupied, that property tax is irrelevant. No benefit of it. Sridhar, sir, what is mean ceiling 8 limit? No ceiling. We have just taken example of 8 houses. It could be 10 or 12. I was just showing you that if you have multiple houses, then case C is just a case which will tell you which house is going to be solved under which category. Why I am making case number C? Because when in an examination, suppose the question says Mr. A is having 4 houses. 2 self-occupied, 1 used for business, and 1 is actually let out. So you will not get confused. You will apply case C. You will come to know that the 2 houses, those are self-occupied. That is going to be treated as nil. 1 which is used as his business, that would be covered under PGBP provision. And the other one which is let out, I need to solve it as per case number D. So you will not get confused that multiple houses cases, what do I need to do? Once you will finalize that which house is going to be solved under which category, that would be very easy after that you can solve the question very easily. And let me tell you a very interesting thing. There is no case A, B, C, D, E, F, G under the Income Tax Act. This I have just prepared for your understanding, for your better understanding. Because what happened when in the question 5-6 houses information given, we confused. What do we need to do with these much of houses? So once you will segregate them, that okay, out of these 6, 2 will be self-occupied. This would be as per PGBP. This would be as per case number D. This would be as per case number E. So you will understand how to solve the question. So there is no case A, B, C, D, E, F, G under Income Tax Act. I have just prepared these cases for the purpose of classification of the question, because the question will be asked. Either question will be asked you to solve that question as per case A or B, circumstances would be there, or it would be like case number D, etc. So once you finalize the case, that would be really easy to solve that question. Just like the car perquisite we have gone through in salary topic. If you find out which case do I need to apply in case of car perquisite, so you are not confuse that, you need to see car owned by which person, who is paying the expenses, for what purpose car is using. So once you finalize that, identify that case, the solution is easy. In the same case, I have just identified 7 kind of situation would be there in an examination. And of course, all kind of question would not be there. Either they will ask team let out or self-occupied, etc. So you will get to know the benefit of this cases A, B, C, D, etc. So now we are moving on to our case number D. So case D cover those houses. Now, if I'll ask you by showing you this diagram again, can you tell me which cases or what kind of situations would fall under case number D? What kind of houses, what kind of question I need to solve as per case number D? Case number D will consist of 2 kinds of properties. If that is actual let out, or if it is deemed let out. So if any property becomes deemed let out, the solution would be as per case number D, or if the property is actual let out, then also case number D apply. But if that is actual let out, then it should be let out for 12 months. That means for full year. If it is let out less than 12 months, as you can see, in this case, let out and vacant. So that means not let out for full year. So case D nahi, F is applicable. If it is let out for 7 months only, case G applicable. So if the property is let out for full year, full 12 months, and full rent received, only that case would fall in case number D. So suppose now in question, the question says property is let out for 10 months and 2 months vacant. So I know I'm not going to apply case number D provision. That is going to be solved as per case number F. So case D will consist of 2 kinds of questions. If the property is deemed let out category, or if it is actual let out, but the property should be actual let out for full year. If it is less than 12 months, D would not be applicable. There would be some other case applicable. And full rent received. That means the tenant has paid the full rental value. There is no bad debts or rent. Same in case of business, like bad debts of debtors. So in this case, tenant is our debtor technically. So if there is no bad debt, we call it unrealized rent. That we can see no unrealized rent exists. That means full 12 months payment has been received. So only this kind of actual let out property and all other deemed let out cases would fall, or we need to solve them as per case number D. Now, how to solve it? If you have remember the format of house property, the first thing we need to calculate is GAV. But we have not calculated yet. Why? Because in case of A and B, we do not need to consider GAV because the annual value directly is nil. But from case number D, now we need to calculate the gross annual value first. Step number 1. For calculation of gross annual value, there would be 2 values which will be given in the question. One would be municipal value and there would be fair rent. That would be given in question, municipal value or fair rent. You need to compare with these 2 values, municipal value and fair rent, and the higher you need to consider. The higher value you need to consider. Now this higher value under step number 2. This higher value needs to be compared with another value, that is standard rent. That would also be in the question. So this higher value needs to be compared with standard rent, and the lower value needs to be selected. That is generally called expected rent. The lower is we call expected rent. But this lower value is again not GAV yet. We are in the process of finding out the gross annual value. Okay? So now this lower needs to be taken for step number 3. Now we will find our GAV. The lower value, that means the expected rent. Now this needs to be compared with our last value, which would be actual rent received or receivable. The actual rent received or receivable. And the higher of these two would be my gross annual value. So this is the actual rent we receive. This is a government value which is as per Rent Control Act. There is an act in our country, Rent Control Act. So a value of that property as per Rent Control Act would be called standard rent. That would be given in question, not need to bother. All these value would be in the question. Fair rent is the market rent value of that property, and municipal value is the rental value of that property as per municipality rules. So these three values are technically value which has been decided by market or government. This is our real value, the value on which we have let it out our property and the amount we received. Now, as you are seeing, in case of actual let out and deemed let out, we are solving GAV as per step number 1, step number 2, step number 3. But I guess you understand one thing, that if the case is for deemed let out, can you identify that out of these 4 values, municipal tax, fair rent, standard rent, and actual rent received, in case of deemed let out of these 4 values, which value will not be given in the question? Correct, Vishaka. Correct, Lakshmi. Correct, Gayatri, Isha. Correct. Actual rent received would not be in case of deemed let out, because the name is deemed let out. There is no actual tenant. So this value would not be in the question. So of course, this lower would become the GAV automatically. Understood? So that's the way we will find out GAV. And in the question of house property, if you able to find out the GAV, that means question is solved, because the format is after that is just municipal taxes paid by owner. That would be given in question. If paid, reduce it. This is your net annual value. Out of this, we have to reduce deduction of 30%, that is fixed, of net annual value, and interest deduction. That would be current year and 1/5 of PPI. The good news, now there is no limit for interest deduction. No 2 lakh, no 3 lakh. As much as interest is eligible, whatever is your current year interest and whatever is your 1/5 of pre-construction period interest, whether it's 5 lakh, 10 lakh, 20 lakh, whatever it is, you can claim under default tax regime as well as under optional tax regime. There is no restriction regarding this. Understood? This is the way we solve case number D. The good news, case number D solution, E solution, and G solution all same. So case A and B solution same. C does not have any solution. And 3 cases, D, E, and G also same. So now we will see which case will fall in case number E and why the solution is same. You will identify automatically when we will solve case number E. So case number E is a case when suppose there is a house which is actual let out. This is similar to D. What is the difference? But there is a difference. Actual let out for 12 months, but some unrealized rent is there. Some unrealized rent is there. That means there is some bad debt. That means tenant occupied the property for 12 months, but the full rent has not been paid. Some month rent tenant did not pay it and we are not able to recover it. So it is just like bad debts write-off. So this case cannot be fall in category D because in category D, we are going to solve when let out for 12 months and full rent received. Now D case and E case will only have one difference. We need to calculate the GAV in E case also. Step number 1, save. Municipal value, fair rent, whichever is higher. This higher needs to compare with standard rent. Step number 2, same, no difference. The lower value. Step number 3. This lower value needs to be compared with again same value, actual rent received. And the higher would be GAV. After GAV, same process. Reduce municipal taxes, reduce interest, reduce deduction. But can you identify what would be the difference in the solution of case number D and E technically? What would be the difference? You can see almost the steps are same. No difference in steps. But there would be one difference in case of D and E. That's why we bifurcate it separately. So in examination, you will identify, okay, this would be the difference when I will apply to calculate the GAV concept. Omkar is saying, sir, please explain with example also. It is easy to understand for us. Please, for all cases combined. We will solve question from the illustration. So first of all, I'm just trying to make you understand that what the concept is and the same concept applicable in almost every case. So we will take the example from your study material, MCQ. You will able to understand what exactly we are doing. Yes, the difference would be actual rent receipt. In case of case number D, the actual rent receipt would be always for 12 months. Because we consider only those cases, case number D, when full rental value received. But in case number E, the actual rent would be less than 12 months. For example, tenant reside in a property for 12 months. And the rental value was suppose 20,000 per month. And the rent we have recovered only for 10 months. So for 2 months, bad debt was there. We called it unrealized rent. So in case of E, the actual rent receipt would be only for 10 months there for the purpose of comparison. That would be 2 lakh rupees. And suppose the question say you have received the full amount of rent, no unrealized rent. Then we will solve it as per case number D. And the rental value, actual rent receipt would have been 2,40,000 rupees. So there is no difference in case D and E. Automatically, when you will take this point, actual rent receipt. So in case number D, you are going to write it down 2,40,000. If it is case number E, you are going to write it down 2 lakh rupees. I've already told you in examination, do not write this is case number E, case number D, because there is nothing case A, B, C, D, E. under Income Tax Act. It is just to make you understand that what is the difference between different situations. If your assessee, suppose a client comes to my office and he say, I have a house which is let out and I want to know the taxability of that house. So first of all, I will ask him whether the property is let out for 12 months. He said yes. Okay. And then I'll ask whether you received the full rent. If he say yes, then I know in actual rent received point, I need to consider full 12-month value for the purpose of comparison. And if say no, my tenant just gave me 9 months rent, then I know I need to consider only 9 months rental value in case of actual rent received. So there is no D, E, F, G, etc. It is just to make clear which concept we are applying to solve that question. So you will not get confused. You will be very clear. Once you understand that there is unrealized rent, you will forget about case A, B, D, etc. You now know how to solve that question. Focus case number E. So that would be easy for you. So case number E understood. Any confusion in case number D and E? Case A and B, value nil. You can claim interest benefit. Case number C is not relevant. Actually, when you will complete case D, E, F, and G, then case C automatically irrelevant because you will automatically know which situation or which kind of question do I need to solve as per which case. So case C was a selection case, not a solution case. So that will always automatically be irrelevant once we will solve all D, E, etc. D is a case, 12-month let out, 12-month rent received. E case, let out 12 months, but there is unrealized rent. So when there is question, you would be able to clearly understand that what kind of solution I need to do. Interest calculation सब में same रहेगी. There is no difference in interest calculation, all same case. Mac is saying, sir, in case of D, less than 12 months, that is this not understood. Where I have written less than 12 months in case of D. In case of D, only we need to solve question as per case number D when there is property let out for full 12 months and rent also received for full 12 months. If the property is let out for 12 months but rent received less, that would be case number E. So now you can see in case D and E, property is let out for 12 months. But rent received depend. If rent received less than, it would be E. If rent received full, it would be D. Now we have left with two cases. F and G. A, B, C, D, E, we have done. Now F and G. First, we will discuss case number G. Why we are discussing case number G? Because the solution is same as per case number D. That's why. F we will discuss at the end. Now case number G says, suppose there is a property which is let out for some part of year. Listen very carefully. If let out for some part of the year, and remaining time self-occupied. So part of property is not let out self-occupied. The property is let out for some part of the year. It's not first floor, ground floor case. That's different. It is for part of the year. That means suppose the property is let out for 7 months and full property is self-occupied for 5 months. So in that property, either the tenant was there, and when tenant was not there, tenant vacated the property, then we were there. Property was not vacant. Remember very carefully. Because if property is vacant with let out, that is case number F. So either tenant was in the property or we were in the property. Suppose you are living in a house and for 8 months you were there and you went somewhere else. So for 4 months you let it out. So the combination could be 7 or 5, 8 or 4, 9 or 3, 6 or 6 months, whatever it is. The concept says when there is a property which is either let out or self-occupied during the previous year. Now the solution pattern is exactly the same as per case D or E, whatever. Again, in this case, the actual rent receipt would be only for 7 months we need to consider. All other thing is same, like for the calculation of GAV, we need to take the municipal value, then payer rent, higher with standard rent, lower with actual rent received. Now, automatically, how much actual rent received would be there for 7 months? Needs to compare. Higher would be your GAV. After GAV, solution is same. Reduce municipal taxes, reduce 30% deduction, reduce interest current year, 1/5 of PPI, no limit is there, and you will get your answer. So G case, that's what I was saying. That's why I was saying that case number D solution, E solution, G solution, same. Because on all these three cases, there is only one difference. Actual rent received. In D case, it would be for full year because property was let out for full year and full year rent received. Case number E, property let out for full year, but rent received less. So ARR would automatically change. Now in G case, let out for part of the year. So we will take that part of year actual rent we have received. So part of the year let out, part of the year self-occupied. Suppose out of this 7 month let out, 1 month rent is unrealized. That is possible. We let out our property to a tenant for 7 months. He just paid 6 months rent. Still, what will happen? Nothing. In this ARR, we will take 6 months rent and solve it. And there is no identification of case D, E, G. You do not need to mention it. Why I am telling you this? You will understand the power of these cases when you will solve a question. When you will see there is a property which is let out and self-occupied. So now you will focus on only case number G. Because when we will discuss case number F, everything is going to be messed up. So if I have not made these cases separately, so after reading case number F, you might get confused and you will mix up the cases. So that's why you will be focused very clear that which question need to be solved in which case. That is really needs to understand before solving any question. So now let's solve some question of finding out GAV from your study material. Ketan is saying only in case of D there is no limit. No, Ketan. In case of D, E, G, there is no limit. You can claim as much interest as you want. Only interest limit in case number A and B. In all other cases, the interest limit is unlimited. Goldie sir, why can't we follow one systematic pattern which includes all cumulative adjustment? When I will tell you case number F, Mr. Goldie, then you will get confused. Then you understand the power of these separate cases. If you want to apply that systematic pattern, you can. But let me tell you, after the discussion of case number F, everything is going to be just like a mixed veg. So for that purpose, I have just separated all the cases. So you will understand which case we should apply, how to solve that case in that scenario. You will find it out, of course. Chalo, let's solve the question from your study material. Okay, illustration number 1. Jayashree owns 5 houses in India. So a single individual is having 5 houses, all of which are let out. Compute the GAV of each house from the information given below. So one by one, we will see to it. And no other information. So there is no unrealized rent. All cases fall under category D. No unrealized rent information is given. So first case we are going to solve municipal value fair rent. Whichever is higher we need to take. So the higher would be, all these cases are case number D because there is no information of unrealized rent, etc. Higher would be 90,000. Standard rent not applicable. So if something is not applicable, you can consider it as a dash. So that is 90,000 would be the lower value because generally we take 90,000 standard rent lower. But if standard rent not given, then this value will be automatically considered. Now 90,000 and actual rent receipt is given 72,000. So what is going to be your GAV? The higher value. The first case GAV would be 90,000. Same pattern. 5565 higher is 60,000. So 5560 higher is 60. Now 60 and 75 we need to take the lower value. That would be 60. And the lower 60 needs to be compared with 72. So GAV would be 72. Clear? 65, 65. You can select anything. Higher would be 65. 65, 58. The lower would be 58. Now 58 and 60. Higher would be 60. 24, 25. Higher is 25. 25 and not applicable. So 25 would be the value. 25 and 30. Higher would be 30. So as on, you can find out the properties GAV. Once you find out the GAV in question, the solution is after that is just very simple. So they have explained you in detail. The lower is called expected rent. Okay. These are normal cases. An interest calculation. These are interest calculation question. You can try all the interest calculation question also. So illustration number 4 we are solving. That is for unrealized rent. Aniruddha has a property. So as I have told you, you do not need to mention in the examination case number A, B, C, D, E. It just make you clear that how do I need to solve this question. You will see in this question. Aniruddha has a property whose municipal valuation is 1,30,000. The fair rent is 1,20,000. Standard rent is 1,20,000. The property was let out for a rent of 11,000 per month throughout the previous year. Unrealized rent was 11,000 and all conditions prescribed by rule number 4 are satisfied. He paid municipal taxes 10% of municipal valuation. Interest on borrowed capital was 40,000 for the year. Compute his income from house property. So under income from house property, which regimes need to be followed? That is relevant if the property is for self-occupied purpose. Otherwise, the solution would be same in all the regime. Fine. So now, first of all, we need to calculate or we need to understand which case is this. This case is case number E. Now just focus on case number E concept. Municipal value, fair rent needs to be compared with standard rent. Lower needs to be compared with actual rent received. That would be your GAV. Fine. So municipal value is 130. This is 110. Higher is 130. Rent Control Act value 120. So lower is 120. Now 11,000 was the rent, and out of that 1 month rent, that is 11,000, is unrealized rent. So technically we are receiving only 11-month rent. That would be my actual rent received, 1,21,000. Higher is my GAV. Once you find the GAV, the answer is now too easy to solve. You can find it out, GAV. Then we have reduced municipal taxes paid by owner. Then there is standard deduction. Then there is interest on borrowed capital, because it's D or E case, no interest limit is there. Full value you can deduct. That would be your answer. Clear? So now moving on, case number N. Visual is saying, we trust you, sir. If you're doing something, then it must be in our favor. Okay, thank you, Visual. Sure. So do you find it difficult? You have gone through with salary topic. In comparison to salary, out of 7 cases, we have covered 6 we have completed. A, B, C, D, E, and G. Only F has left. Baki we have completed everything in house property. There is some clarification, etc. left. So compare this with income under the hat salary, and you will find out how easy is this. And let me tell you, we have discussed 6 cases. In those 6 cases, there is only 2 solution cases. A and B solution same, D, E, G solution same. That is automatically you will consider the actual rent received, the amount you get. The problem is with case number F. So let's move on to case number F. This case is a tricky case to calculate the GAV. So that's why I have made separate cases, so you will not get confused when case number F provision would be there. Now, what is case F? Case F says when there is any property let out, actual let out, but vacant also for some time. If these 2 conditions fulfill, remember very carefully, if these 2 conditions fulfill, this is going to be solved as per case number F provision. These 2 conditions, property should be actual let out and vacant also. That means suppose property is let out for 10 months and 2 months vacant, which case F. Suppose property is 10 months let out, 2 months vacant. Out of this 10 month, 1 month unrealized rent also. So for unrealized rent, we generally solve the question as per case number E. But if let out and vacant is together, the case F will apply always. Always case F apply. Even if suppose property is 8 months let out, 2 months self-occupied, 2 months vacant. It seems like case number G, when part of the year let out and part of the year self-occupied, but there was no vacant concept. So as soon as let out and vacancy comes together, then unrealized case, then self-occupied case are irrelevant. Always solution would be as per case number F. So now you understand why I have made separate cases, because those are mutually exclusive cases. If let out and unrealized rent, then case number E applicable. If let out and self-occupied, case number G applicable. You will not mix them. But if let out and vacant and unrealized rent, F. Let out, vacant, self-occupied, F. So F will prevent, if there is let out and vacancy, that will override all the cases. The solution needs to be done by case number F. Understood? Get it? Sure. Now, how to calculate GAV? That is only the calculation you need to understand, because GAV calculation is going to change in this case. Now, the calculation of GAV would be little different. The step 1 would remain the same. That's a good news. That means municipal value, parent, whichever is higher. So there is no change in step number 1. One more good news, step number 2 will remain the same again. This higher value needs to compare with standard rent, and you will take the lower value. Now suppose municipal value was 2 lakh. Bare rent was 2,40,000. So technically, this higher value would be 2,40,000. And suppose standard rent is 2,20,000. So we will take lower value. That means 2,20,000. So step number 1, step number 2 is same, no difference. Now the change in step number 3 is there. Step number 3 says this lower value, what we have find out from step number 2, जिसे हम क्या बोलते हैं? What we call it expected rent. So this lower value 2,20,000. Now this needs to be compared with a new value now. Suppose the property has been actual let out for the rent of, let's take 22,000 per month. Clear? So generally we take actual rent received for the purpose of comparison in step number 3. But in case number F, when let out and vacancy comes together, this comparison result in a new value. The new value will be called annual rent. So in case number D, case number E, case number G, it was actual rent received. And for case number F, it is annual rent. Can you tell the difference? What is the difference between actual rent received or annual rent according to you? You understand the difference? The actual rent received and annual rent. What is the basic difference in these two terms? Actual rent received means the amount you actually received. Ketan is saying, sir, if possible, teach us all chapters for exam. Your teaching method is very interesting. Thank you. But this is my last session. After that, new faculty would be there to teach you about other heads of income. I will come back in the last topic, computation of total income and tax. That would be in July. So other faculty would also be good. Just try it. So rent received is actual rent received, and annual rent means 12 months rent you need to take in this case. Full 12 months, whether it has been received or not received does not matter. Annual rent means we need to take full 12 months rent always, because that term denotes annual rent. So if the actual rent was 22,000 per month, so the annual rent is going to be 2,64,000. Anything difficult till now? Case number F. Isha is saying no. SK is saying no. It is not looks difficult till now because it's not yet completed. We are not going to compare this 2,64,000 2,22,000. It is not that simple. So once you will get your annual rent, then before comparison to this lower value, we need to reduce two values first, if that is applicable in the question. So if in the question there is any unrealized rent also in the question. Suppose the question says that 1 month unrealized rent was there. The property has been let out. Property has been let out for 11 months, 1 month vacant. Fine. And 1 month unrealized rent was there. So if there is any unrealized rent also in this question, if any unrealized rent, then you need to reduce that rental value of that unrealized rent. For 1 month, it would be 22,000. We need to reduce it from annual rental value. If suppose in this question there is no unrealized rent, then we are not going to reduce this. And suppose if property is also self-occupied for some time duration. In this example, there is no self-occupied. 11 months actual let out, 1 month vacant, and 1 month unrealized rent. The property is not self-occupied. But suppose if in the question, property is 10 months let out, 1 month vacant, 1 month self-occupied. And out of this let out time, 1 month unrealized rent. So if for any time property is self-occupied, then we need to reduce the self-occupied time duration rent also. But if in this question, because no self-occupied time has been given, so we will reduce only 1 month unrealized rent. And after that, my value is 2,42,000. Now this is going to be compared with the lower value. So what is the difference? The difference is you need to take the annual rent and you need to reduce any unrealized rent if there is in the question. If there is any self-occupied duration is there, you need to reduce that also. And after reducing the rent for self-occupied duration and unrealized rent, the value you find out, that is going to be compared with this expected rent or lower value, what we get. Understood? Galti is saying, sir, before inserting annual rent in step 3, we have to do modification, annual rent, right, sir? Yes, we have to reduce these two values before comparing this value to the lower value, analyze rent or self-occupied. Visual is saying clear. It's not yet completed. Now you need to find the higher value. As step number 3, we do find out the higher value. And in this case, the higher value would be 2,42,000. Now, out of this higher value, it's still not GAV. Generally, the higher value consider as a GAV, but not in case number F. Case number F says, if this value, which we find out as per annual rent calculation, if this value become higher, in this example, this become higher, then you need to reduce vacancy rent also. So now the vacancy time duration rent, we did not reduce over here. You cannot reduce over here. Out of annual rent, you can only reduce unrealized rent value or self-occupied rental value. And after comparison, if the higher value is this value, then you can reduce the vacancy time duration rent also. So how much time it was vacant? It was vacant in the question for, you can see 1 month. The vacancy is for only 1 month. So now you can reduce the vacancy rent from this value also. that would be 2,20,000. Now this is called GA. Understood? This is the GA. So technically there are two steps involved extra. From annual rent, you need to reduce underlies rent or self-occupied if that is in the question. Then if the higher value is this annual rent value, then you can reduce the vacancy rent and that would be my GAV. After GAV, the other part is same exactly, no difference. But it's not yet completed. It says out of these two values, which was one is government fixed value, which is expected rent, and this value which you have find out from annual rental value. If the higher is this value, then you can reduce vacancy and you will get the GAV. But suppose if higher is this, I am changing the question. Suppose if we change this question, suppose municipal value is 3 lakh, fair rent is 3,50,000, standard rent is 2,80,000. All the information are same. Now what will happen? The higher of these two we need to take 350. This 350 and 280. The lower would be 2,80,000. Now suppose this is my lower value and the value we figure out as per the actual rent concept is now 2,42,000. So the provision says that if annual rent value is higher, then you can reduce the vacancy rent. But if suppose in this situation, the higher value is government value, which we have derived from the municipal value, fair rent and standard rent concept. This 280 is the higher value after comparison with this value. So if government value is the higher value, then there would not be any vacancy rent deduction. This would directly become your gross annual value. So the vacancy deduction you can only claim if the annual rent value becomes higher in comparison to the government value. Then you have right to reduce the vacancy rent. And after that, you will get the GAV. But if the value you have derived from annual rent is not higher than the government value, what we have derived from municipal value, fair rent and standard rent, and if that value is higher, then that would be directly classified as GAV. You cannot reduce the vacancy rent out of it. That was the concept of GAV in case of F case. Is it seems difficult now? Sir, how to determine annual rent under GAV for theory purpose? That has been written in the notes, Mr. Gopal Krishnan. You can go through it. Yes, Mahek. If annual value is higher, then only deduct vacant rent. Yes, exactly. Ketan is saying easy, Visual is saying easy. Still easy. Not yet completed. Now there could be a very interesting situation. Suppose what happens if the government value, suppose in this example, I change it, suppose in this circumstances, municipal value was 3 lakh, fair rent was 350. Suppose standard rent is 2,42,000. Clear? So if you will calculate the value higher, lower, it would be higher, 350. Then the lower would be 240. Fine. Now, when you will compare the value of annual rent, as we have done in these cases, so the annual rent value is also 242. This is 242. Now the problem could be arise that what happen if both values are equal? Because in other case, it does not matter which is higher. If both are equal, you can take anyone because that becomes GAV. But in case of F, it is a problem. If both are equal and if we will take this value as a higher value, then you cannot reduce vacancy rent. And if this is going to be taken as higher value, then you can reduce the vacancy rent. So it will affect your taxability. So what will happen if the standard rent, that means government value, and our actual rent value is equal? Because in this situation, it would matter which you are going to consider as higher, because it will affect your taxability, because in one case, you can reduce vacancy rent. In other case, you cannot reduce the vacancy rent. So the benefit has been given to the assessee by the department. It says if it is equal, then this value, the annual rent value, would be considered for the purpose of higher value. That means you can reduce vacancy rent from this value. So the balance would be your GA. So in equal case, the lower, that means the annual rent value would be considered as higher, and you can have advantage to reduce the vacancy rent and reduce your income. So that will reduce your taxable. Now case number F has been complete to find out the GAB concept. Interesting. Now suppose if I have not told you case number D, E separately, and there is a question in which it has been written, assessee has let it out a property to a tenant for 10 months. There is 1 month unrealized rent, 1 month vacancy, 1 month self-occupied. So what will happen? You will get confused. Should I reduce unrealized rent? Should I reduce self-occupied time duration? Is it going to be solved as let out case, deemed let out case, E case, G case? So now once you will see in a question, there is a let out and vacancy both given. Then forget about everything. Just focus on case F provision. Now you know I have to deal with annual rent concept. And suppose there is no vacancy. Let out and self-occupied, case number G. Let out but unrealized rent, case number E. Let out rent full received, case number D. So now you will be very at ease that I do not need to apply any special provision. I would be able to calculate normal GAV without applying the concept of annual rent. So due to this annual rent concept, we have to bifurcate all the cases of let out and deemed let out separately. Understood? Gold is saying, sir, in case step 2 value is higher, then annual rent we cannot deduct vacancy rent. Yes, if the government values comes higher, like municipal value, fair rent, standard rent, if that becomes higher in comparison to annual rent, then we cannot reduce or we cannot get the benefit of reduction of vacancy rent. ओमकारा is saying, sir, vacancy rent और unrealized rent different होता है. एक बारी unrealized rent less किया गया, फिर vacancy rent भी less किया गया. Please do clear, sir. Yes, Mr. ओमकार, vacancy rent और unrealized rent अलग होता है. अगर टेनेंट आपकी प्रॉपर्टी में रहा 12 महीने और 2 महीने का पैसा देकर नहीं गए, तो वो अनरिलाइज रेंट है, लाइक बैड डेट्स. बट अगर आपने प्रॉपर्टी ही 10 महीने के लिए लेट आउट करी और 2 महीने के लिए प्रॉपर्टी खाली थी, तो उसमें तो आपका कोई बैड डेट नहीं हुआ, उसमें तो 10 महीने का ही रेंट आपको मिला. तो अगर प्रॉपर्टी खाली है तो वो वैकेंटेड है, अगर प्रॉपर्टी लेट आउट है और पैसा टेनेंट नहीं देकर गया तो वो अनरिलाइज रेंट है। दोनों अलग अलग सिचुएशन है, इसीलिए वैकेंट के साथ आते ही लेट आउट केस एफ में चला जाता है, और अगर वो अनरिलाइज रेंट के साथ है तो वो केस नंबर ई में चला जाता है। Akash समझ गया है। Akash is saying this case is likely to come in examination. Of course, this is the only case in which you need to apply some extra brain in case of income from house property. Else, what is in income from house property except the calculation of pre-construction period interest? Municipal value, fair rent, standard rent, higher, lower, higher. You will get the GAV. You can easily solve that question. Syed is asking for a break. Yes, yes, I will give you a break, but I will give you a small homework for break purpose. So that was case number C we have gone through. You can read these cases now because as we have discussed all these cases, that would be really easy for all of you to understand. Like case number D, I have mentioned what is this case. Case C is, you can see multiple houses case. It just tell you which is going to be applied according to which circumstances. Those are actual let out as per case D, E, F, G, deemed let out as per case number D, etc. Then you can see the case number D. Case number D says that actual let out for 12 months and rent received 12 months, and all deemed let out cases will fall under case number D. You can see step number 1, step number 2, step number 3 to find out the gross annual value. Case number E, let out for 12 months, but unrealized rent is there. There is some bad debts right now. Tenant not paying rent. So case number E, again the same concept, automatically actual rent receipt value would be changed. You can see that. Important clarification, the unrealized rent which you have not recovered would not become part of your actual rent received if you have proved that you have taken all the steps to recover the rent from the tenant. You have sent notice against him, you have filed a case against him, then only it will be assumed that that would be your unrealized rent. So please go through with the important clarification. Now the famous case, case number F, let out and vacant. If these two conditions fulfill, always case F apply. If let out and vacant, then whether it's self-occupied does not matter, unrealized does not matter. If let out and vacant, always case F will apply. And you can see case F, condition 1, condition 2, you have to find it out. Okay, now these are 4 examples for this let out and vacant cases. So you need to find the GAV in all these 4 cases. Fine. So this is a break homework. You can have your tea, coffee, etc. And if you have time, try to solve these examples. When I'll be come back, I will solve for you if you're not able to solve. But we will discuss these examples for calculation of GAV in case of F case. G case we have already discussed. You can take the screenshot of this so you can try it later. G case, part of the year let out, part of the year self-occupied. We have already gone through with this concept also. Now, after that, all cases, there are some notes, small clarification we need to go through. These 2 points we will go through, and these some clarification. And house property you can see is going to be end soon. Then we will try some test knowledge question and MCQ also. And there's one concept when multiple properties are there. So you can ask your query. Let me see if there's any query. Otherwise, we will go for a small break. Miss Max, today I can't attend provision explanation by me. Sorry, sir. No issue. No problem. So Ashok sir, can we have a small break? have your copy T, etc. So Ketan is saying, sir, in previous batch you have taken capital gain and other source lecture. Can I watch that one before our September 26? Yes, you can watch that, but that would be, I guess, for assessment year 25-26. So there may be some changes. So that could be helpful for you. You can watch them, and if there is any amendment, you can watch from the recent lectures. That would be easy for all of you. Okay, the answers has been sent by Ketan. First case GAB 18. Okay, so let's discuss that. So all these four cases are of case number F, like municipal value 90,000, fair rent 140, standard rent 120, actual rent 12,000 per month, and vacancy for 3 months. So in these value, higher is 140, 140 and 120. So the lower would be 120. 12,000 per month is actual rent and vacancy given only for 3 months. So when we will take annual rent, that would be 1,44,000. No unrealized rent given, no self-occupied rent given. So higher would be 144. So 144 would be higher. So now we can reduce the 3 months vacancy. That means 36,000 from this value. So my GAV would be in first case 1,08,000 rupees. Correct, Ketan? Absolutely perfect. Suppose in above example, vacancy period is 1 month in place of 3. So in that situation, out of 144, we can reduce 12,000 rupees. So that would be 1,36,000 as my GAV. Clear? Next example, 2 lakh is municipal value, fair rent is 240, actual rent is 21. Tenant vacate the property on 1st 11/23. So please change this date. It should be 1st 11/2026 for our previous year 26-27. And thereafter it remain vacant. There are 2 months unrealized rent, June and July also is there. So first of all, municipal value and fair rent, whichever is higher is 240. And no standard rent is given. So the lower value also will be 2,40,000. Now the tenant vacate the property and unrealized concept is also there. So we need to take the annual rent based on the actual rent value, which was 21,000 into 12, that would be 2,52,000. Out of this 252, we need to reduce 2 months. Unrealized rent, that would be 42,000. After reducing 42,000, this would be 2,10,000. And because it's 2,10,000, the higher value would be this. And because this is our higher value, so this is directly going to be the GAV. And no vacancy time duration we can reduce from this category. So the GAV would be 2,40,000. Example 4, if in example 3rd, no unrealized rent was there. So if there is no unrealized rent, so lower value as we have found out was 240. Annual rent would be now 252. Now higher value is 252. So now we can reduce the vacancy time duration from 1st November 26, November, December, January, February, March. That means 5 months vacancy, that would be 1,05,000. So remaining would be your GAV. That is 1,47,000. So these are 4 examples of case number F in which we understood how to calculate the GAV. Is it difficult now? As I have told you always, then when we were going through with provision F, you might be thinking how complicated it is. But we just solved 4 examples and calculated the GAV within 5 minutes, I guess. Now you feel the case F was also difficult. So when we do practical things or when we practice the question, things change. If you try to go through with the provision only, you might feel these are complicated, but as soon as you start practicing things, solve practical question, you will understand the concept more clearly and you will find it out that is not that difficult if we have understood the concept clearly. Sure. Well done, everyone. You have tried. Very nice. It's 132. Yes, correct, correct. Visual is right. In question number 2, that would be 132. I have written wrongly. My mistake, my bad. It should be 1,32,000. Sorry. Sure. So yes, the second one will be 130. Yes, 132, of course, of course. I just mistaken. Clear it? Chalo. Now we will discuss the clarification, etc. Case number G, you can go through it. Recovery of unrealized rent allowed as deduction under section 25A and 25AA. So unrealized rent is just like a bad debts in case of business. So the treatment of unrealized rent under income from house property, we do not consider it as the rental value or as our income. You have seen that in case of E, we do not consider the unrealized rent value as same in case of F also. We reduce it from our actual rent received or annual rent. But what happened if something is our unrealized rent? Suppose in 2022-23, the total rent was 3 lakh rupees. Out of that 3 lakh rupees, 50,000 was unrealized rent. The tenant did not pay us. So we must have considered 2,50,000 for the calculation of actual rent received in 2023-24 or whatever year it is. Now suppose after 2 or 3 years, the tenant realized his mistake. And in the previous year, 25-26, he is coming back and paying us the unrealized rent which he has forfeited at that time. Same way, the bad debt recovery. Suppose there is a bad debt in year 22-23, debtor did not pay it. And in the previous year, now your debtor is coming to pay you the amount which he has been forfeited. So if it happens, in case of unrealized rent, if you recover any unrealized rent which has been allowed as deduction in the earlier year to which it relates, but you are receiving that amount in the previous year, then after deducting 30%, 70% is going to be taxable value. Why are we reducing 30%? Because if that becomes the part of that year income, the 30% stern reduction would have been claimed. So in the year in which you are receiving it, still you will get the 30% reduction and 70% is going to be your income from house property. So a very simple case. The same concept is applicable in case of arrear of rent. As we have gone through under salary head concept, arrear of salary. If you received any salary due to retrospective effect, that is going to be taxed. In the same way, if you receive any arrear of rent due to retrospective effect, whatever amount you will receive in the current year, after 30% reduction, income from house property would be 70% taxable. So same concept in case of recovery of unrealized rent or arrear of rent received. No other deduction would be provided. Directly 70% you can tax. Now some clarification. Clarification number 1 is very important. It's very simple. It looks like very simple, but it is very important. Let me tell you, the income from house property is that simple topic that once you go through with the illustration and test your knowledge question, then you will feel it is so simple that even you can solve it on a calculator. You do not need paper and pen for the solution. You will find out the GAV higher, lower, higher on calculator. Then you can reduce municipal taxes paid and then state deduction and interest. So you are not going to do that in examination, of course. You have to write it the answer, but it is that simple concept. But suppose if you are trying 10 questions of income from house property, and out of those 10 questions, maybe 3 or 4 question answer is not matching. So that would be probability that you are not applying point number 1 clarification. So this clarification is having this much importance that due to ignoring this point or not applying this point, maybe your answer is not matching. So please, it's a request. Please understand this clarification number 1 very carefully and apply in all questions if the question require it. So it says that there is 3 value like municipal value, fair rent, standard rent, and one is actual rent. So generally, if in the question, suppose municipal value is not given, then treat it like a dash. And fair rent is given, so you can compare the higher value. If standard rent is not given, treat it like a dash. And whatever higher value is coming from these two values, you can compare it with the standard rent, which is a dash, and the lower you can take it for further solution. So if municipal value not given, not a problem, consider it as a dash. If standard rent is not given, not a problem, consider it as a dash, but that is not in case of fair rent. If fair rent is not given, and actual rent is given in question, that means it's not a case of deemed let out, it's an actual let out case. So if fair rent is not given question, but actual rent is given, then you cannot treat fair rent as a dash. So if not given fair rent and actual rent in given, then you have to calculate it on the basis of actual rent. And you need to put the value over here. For example, suppose the municipal value is given in question is 2 lakh. The fair rent is not given in question, silent. Standard rent is suppose 2,40,000. Actual rent per month has been given 25,000. And 2 months unrealized rent. So which case it is? It is case number D. But if fair rent is not given, then we need to take fair rent on the basis of actual rent. And the formula is actual rent into 12. That means technically a kind of annual rent it could be. So fair rent is the fair market value of that rent which the property can fetch. So actual rent is 25,000. So we will assume that the fair rent is 3 lakh. Now you need to apply the provision accordingly. So this is higher is 3 lakh. And this is compared to 240, lower is 240. And ARR would be 10 months rent you need to take, that would be 2,50,000 as on. So if fair rent is not given and actual rent is given, then you need to calculate the fair rent by multiplying 12 or take the annual value of actual rent. That needs to be compared. Suppose in this example, if municipal value not given, then not a problem, use a dash. Standard not given, not a problem, use a dash. But if fair rent is not given and actual rent is given, then you have to calculate it. So when you solve a question and if there is no fair rent, maybe you are treating it as a dash and you will see that you are not able to find out the correct answer due to you are not applying this clarification. So if fair rent is not given, you have to calculate it on the basis of actual rent. So if in question actual rent is given, but fair rent is not given, then fair rent will be calculated on the basis of actual rent and that fair rent will be called as expected rent. If interest paid outside India and no TDS has been deducted, such interest whether current year or 1/5 of PPI, if loan has been taken from outside India, then you need to pay interest outside India. So for paying interest outside India, you need to deduct TDS. If no TDS deducted, then such interest deduction not allowed. Next clarification, if loan taken for house 1 but used in house 2, then deduction of interest will be allowed from house number 2 for which you have used the loan. Unrealized rent deduction will be allowed when assessee proves that he took all steps to recover the rent from the tenant. In case of A or B, that means self-occupied case, if loan taken for repair, reconstruction, renovation, we have already discussed this clarification, the deduction is maximum 30,000, even if taken before 1499 or after. But if for construction, then 30,000 could be up to 2 lakh rupees, depending upon two conditions we have gone through. This is also very important. So I am marking these two notes as very, very important. If house property purchased or sold during the year, then municipal value, standard rent, fair rent, or expected rent will be taken for part of the year of property owned by assessor. Maybe you have noticed it or not. The municipal value, fair rent, standard rent, these always taken on annual basis. Suppose your municipal value is 3 lakh. Fair rent is suppose 280. Standard rent is suppose 250. The property is let out for 8 months and self-occupied for 4 months. So these value will always remain to be considered for full year. We cannot proportionate it, that we will proportionate 3 lakh divided by 12 into 8. No. These value is fixed government value. It cannot be proportionate, whether property are let out for some part of the year and self-occupied or unrealized rent or vacant. It does not matter. We will not take these value proportionately. Suppose property is 6 months let out, 6 months self-occupied. So you will not take 50% of it. No, it will always consider annual value. The value of actual rent will fluctuate. Actual rent or annual rent, but these are fixed value. But these will be taken on proportionate basis only when this note apply. That if you purchased or sold a property. So if you are the owner of the property for proportionate number of months. Suppose I have purchased the property on 1st of June 2026. 1st of June 2025. 1st of June 25. And the municipal value for the full year has been given 3 lakh. Then for the purpose of calculation, I will take 10 months municipal value on proportionate base because I was the owner of property for only 10 months. So in that case, you can take proportionate municipal value, fair rent and standard rent. Or suppose vice versa case, I have a property, I have let it out and I sold that property, sold it at the end of the December 25. So how many months I was the owner for? 9 months. For 9 months I was owner because I sold it in December end. So now for the calculation of house property, if that property has been let out or deemed let out case, whatever it is. Now we will take the municipal value, fair rent, standard rent for 9 months. Because ownership ke according, it will be proportional. So if you are owner for the property for full year and let it out for 8 months, 6 months, 5 months, 1 month, then these properties value will not change. As an example, house purchase in January 25. So you purchase a property in January 25 and sold on July. So for 25-26 previous year, only April, May, June, you were the owner of that property for 3 months. Purchase in January for previous year 25-26, starting from 1st April 25. Sorry, 2005. So in previous year 25-26, you are only owner for 3 months. From April, May and June. After that, you sold it. So in this case, because the municipal value has been given for full year, now we will proportion it for 3 months and compare with expected rent or actual rent, whatever, for the purpose of solution. Understood? So please solve this example yourself. It's simple. 7th point we have already discussed. In case of builder, the house property which is held as your stock in trade, if not let out, then the 2 years value would be nil, including 1 year in the year in which it has been completed, and for next year value would be taken as nil. This note already been mentioned in the starting also. Provision of house property will be same if property is in India or outside India. No difference. Interest under section 24 can claim even if you have actually not paid the interest, but it is due. This is also we have discussed. So as I always say, revise twice. That's my advice to make you wise. But we have left one clarification in the starting of the house property topic. And I've told you that we will discuss that clarification at the end of the notes. So that clarification we have left, it was regarding co-owner case. This was point number 4. It says if a house property owned by 2 or more persons. So we have seen that in case of self-occupied property, the maximum interest deduction is 2 lakh or 30,000. But that 2 lakh or 30,000 deduction is for not for the property, but for each person. Now suppose there is a house property and the interest is on loan is 5 lakh. Now, if this property is in the name of Mr. A and if it is self-occupied, he can claim the maximum advantage of interest of rupees 2 lakh only. So now if in this case he wants to claim the benefit of more interest, there is an option that he will go for joint registry. So he will registry is in the name of Mr. A and suppose Mr. B is brother. So those are called co-owners. If the property is the name of joint owners or co-owners, and now if the interest is 5 lakh, then now they both can claim half of the interest benefit, 2.5 and 2.5. So maximum they can claim 2 lakh under self-occupied category. So if in the examination, the co-owners case has been given that if there is a property, 4 owners are there, we call them co-owners. Then the interest benefit of 2 lakh or 30,000, we can claim separately for each owner. So that's a kind of a tax planning you can do. If the property interest is suppose 6 lakh rupees, and if you done the registry in your name and your brother and your father, and they are paying themselves, of course. So if they are paying the money equally, and if you register the name of your brother and father in that property, so now you have 3 co-owners. And these 2 lakh, 2 lakh, 2 lakh benefit can be claimed by each of them. So full 6 lakh interest deduction can be claimed by this tax planning. So the 2 lakh or 30,000 is not on the base of the property, but as it is based on the each person. So as the number of person will increase, the deduction of 2 lakh or 30,000 can be claimed separately. Is house property owned by 2 or more person, then such person are known as co-owners. The computation will be normal manner, except that the case of house property or self-occupied, then interest deduction can be claimed by all of them separately, rupees 30,000 or 2 lakh, as the case may be. Ketan is saying, sir, if rent is collected in cash, and while filing return, rent is shown lower than collection, is there any problem? So if you are going to show the rent lower, but there would be value which is coming from fair rental value, municipal value, and standard rent. If that value is higher, then even if you are showing nil rent or if you are showing low value of rent, the higher is going to be considered. So that would not be affect your taxability. The higher rent will be your income from other sources. So now we have completed the theoretical provision of house property. We have gone through with some illustration also. We have gone through with some question also. But one last topic we need to cover under income from house property. And that is illustration number 8 in your study material. And that is a very interesting topic. So I believe generally from income from house property, either the case F question would be framed Or maybe a question which we are going to discuss right now, that is illustration number 8 in your study material. That is not a new case. There is no new provision, but there could be multiple calculation in some special case. And this is a case which says, suppose Mr. A having 3 houses. We have gone through with this concept. You know the concept, we just need to understand the calculation. All 3 houses are supposed self-occupied. So what will happen? Out of these 3 houses, 2 value would be nil. 2 houses value would be nil, and 1 is going to be treated as deemed let out. This we already know. But the problem is, which one need to be considered as deemed let out? So we need to find out that house which is treated as deemed let out, so we can reduce the taxability to the minimum. So how to find out the deemed let out property out of multiple houses if given in the question? So the basic concept says there is 3-step solution pattern. Step 1, consider all houses, or you can say not consider, we should say solve all houses, assume if self-occupied. So please find out the taxable value of all 3 houses, assuming if these are self-occupied. That means as per case number A or B. So annual value will be nil in all these cases. But if any interest has been paid, that can be allowed as a deduction. So step number 1, solve all these cases as per case A or B. No new solution pattern, but there would be calculation increase. Then step number 2. Now solve all these cases once as deemed let out. That means as per case number D. Now find out the GAV on the basis of municipal value, fair rent, standard rent, etc. and solve further, assuming all these 3 houses as deemed let out. So we will have the solution of all 3 houses, or we will have the value of all 3 houses if these are self-occupied, and we will have all the houses value if these are deemed let out. Now step number 3 is just permutation and combination. Now we need to make the combination. How it is? Suppose this is house number 1, this is house number 2, this is house number 3. So combination, there will be 3 cases, 3 combination. Combination number 1. In combination number 1, you can assume any 2 houses self-occupied value, and you need to take the third house value as deemed let out. So that means house property 1, self-occupied value you need to take. How? Because step number 1, we have solved all 3 houses self-occupied value. So the self-occupied value of house 1 needs to be taken. For house number 2, self-occupied value needs to be considered. And for house number 3, take the value if that is deemed let out. And find out the aggregate value of this combination number 1. When you will take the combination number 2, then house property 1 value take again as self-occupied. We need to change. Now house 2 value you need to take as deemed let out. We have to see which combination will minimize my tax liability. And house 3 now needs to be taken self-occupied. So that would be my second case value. Now combination 3. Now house property 1 value I need to consider as deemed let out, and house 2 and house 3 value needs to be considered as self-occupied. This would be my third combination. Out of these 3 combinations, the lowest value or the highest loss case would be the correct answer to identify which house we should consider as deemed let out or which house we should consider as self-occupied. So these are the calculation will increase, but no new concept. You need to solve all houses once as self-occupied case, all houses as deemed let out cases. How it needs to be done? Gopal Krishnan is saying, in case of property held as inventory, annual value in comparison of government value, right? Since no actual rent. Yes, of course. That would be the case like deemed let out. So your question in the study material for this case is illustration number 8. And because illustration number 8 asks you to solve this question under both regime, once under deemed default tax regime and then under optional tax regime. So you will see the solution is so huge, but technically there is nothing complicated because we are just repeating the same provision again and again. Let me show you how to solve it. Ganesh has 3 houses. Suppose there are 5 self-occupied houses, then how many combination it would be? 5 combination. So the number of houses you have to make that number of combination. Suppose if there are 5 houses, then you need to take house 1 as deemed let out, then 4 self-occupied. Then house 2 deemed let out, remaining self-occupied. So the number of houses, exactly the number of combination would be there. Ganesh has 3 houses, all of which are self-occupied. So whether it's self-occupied vacant, same thing. The particulars of the houses for the previous year 25-26 are as follows. Municipal valuation has been given in question, fair rent, standard rent, date of completion or purchase of the property, municipal taxes paid during the year, percentage given only. It has not been mentioned whether the percentage is on fair rent, municipal value, or which. So always remember, if the municipal tax percentage given, it would be always or automatically considered on municipal value. So this would be calculated always on municipal value. Interest on money borrowed for repair of property during the current year or repair. So it could be 30,000 maximum in case of self-occupied, and in case of deemed let out, there is no ceiling has been applicable. Interest for current year on money borrowed in April 2018 for purchase of property. So that is interest for construction and purchase. Now the question asks, compute Ganesh income from house property for assessment year 26-27 and suggest which house should be opted by Ganesh to be assessed as self-occupied. So that his tax liability is minimum. Now, because in this question, it is not being mentioned whether do you need to solve this question under default tax regime or optional tax regime. So we have to solve it via both. Because there is a difference under optional tax regime and deemed default tax regime, that in case of default tax regime, the property, those will fall in category self-occupied, A or B case. No interest deduction is there. So we have to solve this question via both cases. So if we solve that question, first of all, under default tax regime. So case 1, what do we need to do? Suppose all properties are self-occupied, all 3. So the good news is, under default tax regime, if properties are self-occupied, the value would be nil always. Case 2, all properties are deemed let out. Now we need to find out the GAV and so on. Moving on to the illustration, you will find the GAV from the information given. 3,375,000 higher. Higher standard rent, lower 350. So 350 would be the GAV in this case. No actual rent received could be there because properties are self-occupied. So 350 would be the GAV in house number 1. 360, 275. Higher is 360. 360 and 370, whichever is lower. So in this case, GAV would be 3,60,000. The GAV would be in second house 3,60,000. Clear? 330, 380. Higher is 380. 380, 375. So lower would be GAV. So this is GAV for house number 3. We are not doing any new calculation. We are just solving all houses as self-occupied, all houses as deemed let out. So this is GAV for house number 2. This is GAV for house number 1. After GAV, we need to reduce the municipal taxes. So 12% of 3 lakh needs to be reduced. That would be 36,000 from my GAV. 8% of 360 need to be reduced, and 6% of 330 needs to be reduced. So we will get our net annual value, NAV. Now, out of NAV, we have to reduce 30% standard deduction. So you can see the GAV in first case was 350. The second case, it should be 360. In third case, it would be 375. Out of this, we have reduced municipal taxes. No new provision has been there for solving these questions. We are just solving these properties as per case number D, assuming them deemed let out. After reducing municipal tax and 30% deduction, now we will reduce interest. Because that's a deemed let out case, so there is no restriction on interest for repair, etc. Full 55 we can reduce in this case, and full 175 we can reduce in this. So let me show you the solution. Deemed let out case solution. You can see we have find out the GAV accordingly. The municipal taxes we have reduced. So we are having our net asset value 314, 331, 355. Then 30% NAV deduction for standard deduction. Interest full allowed because it's a deemed let out case. So now you can see the value is 219,800, 176,840 and 73,640. 219,800, 176,840 and 73,640. So we have self-occupied value of all these three property. We have deemed let out value for all these three property. Now the combination. Combination 1, case 1, whatever you want to say it, you can say it. Combination A मान लेते हैं, ठीक है? तो इसमें हम what we will do? Suppose first property we are assuming as self-occupied, and 2 and also self-occupied, and we are taking third as deemed let out. So what we will do? Self-occupied value nil. Self-occupied value nil. Deemed let out third value as deemed let out 73,640. So income from house property, if we'll consider third as deemed let out, would be 73,640. Combination B. Suppose first is self-occupied still, value would be nil. Now assume second as deemed let out. So second value of deemed let out is 176,840. And third self-occupied value again nil. So the house property income would be 176,840. In the C case, now we will take first value as deemed let out. So deemed let out value, if the property 1 is 219,800, house second, house third, value would be nil, nil, because we are assuming them now self-occupied. So the total income from house property would be in this case 219,822. So which is best? The best answer is combination number A. So you need to consider property 1 and 2 as self-occupied, and you need to consider third property as deemed let out. Under default tax regime, even if you need to see the combination, there is no need for the combination because these values are nil. So which property is having the highest value? Those two values properties should not be considered as deemed let out. The property which is having the lowest value as deemed let out would be the case. It should be considered as deemed let out. Other two needs to be considered as self-occupied. Because there is no interest deduction. So this not affect your answer. But in case of optional tax regime, there would be interest in case 1. That means when properties are self-occupied. Then this judgment would be only able to find out after making these kind of combination in detail. Sushmita, sir, what is the note below the co-owner point? If property is not registered in assessee name, still would be considered as deemed owner. Sushmita, we have discussed the deemed owner concept in the last session in detail. Yes, it is regarding that. Not higher, Mehak, we need to reduce the taxability. So if income is there, lowest income combination need to be choose. But if there is loss, then the highest of loss combination needs to be choose. Because the highest of loss will reduce your other income by applying set of provision. So if income is there, choose the lowest one. If the loss is there, choose the highest one. Now let me show you the solution regarding the optional tax regime. So this is under default tax regime, you can see. Default tax regime solution easy because in case of self-occupied, we just need to take the nil valuation. But if it is optional tax regime, then in that circumstances, there would be income and loss for properties if rent is there. So you can see in the house number 2, there was 55,000 rupees interest paid. That would result 30,000 rupees loss. Because maximum for repair we can claim 30,000. And 175 in case of third case. So suppose in the second case, it would be optional tax regime. If properties are self-occupied, then there was no interest, it will remain the same. This would be 30,000 loss. Because for repair purpose, maximum loss you can claim 30,000. And that was 1,75,000 for purchase and construction. So the maximum 175 is allowed. In case of optional tax regime, the value of deemed let out property will remain the same. There would be no difference. So the combinations in case of deemed let out, it would remain the same in case of optional as well as default tax regime. It would be 219,800, 176,840, and 73,640. So now we will make the combination on the basis of this. Combination A. Suppose we are taking first property as self-occupied, second as self-occupied, and third is deemed let out. So for self-occupied, we need to take the value nil. For self-occupied 2, we need to take the value 30,000. And for deemed let out value, we have to take 73,640. This is my combination 1. My combination B would be self-occupied first property, nil value. Second property, we are taking deemed let out. That would come 176,840. Third property, now we need to take self-occupied. That would come as a loss of 1,75,000. Very interesting things about to come. That's why I'm solving this question for you. Now in C case, self-occupied value, first property value would be deemed let out. That will be 1,19,800. Second property value self-occupied, that is 30,000 rupees loss. A common mistake which can be happen in the examination, when you will take the third self-occupied property value, it would be loss 175. So if you'll aggregate it like this, your answer would be wrong in case of third combination. Why? Because there was a provision in case A and B that the maximum loss you can claim for two self-occupied property is 2 lakh. If you reduce 175 and 30 both, it would be more than 2 lakh. So answer would be wrong. So in this case, this would be your 219,800 and the aggregate loss would be only 2 lakh rupees. So this limit you need to remember for the purpose of examination. So very, very important thing is case number 3, this scenario. Then whichever case the income is low or the loss is higher, that case you need to select. Got it? So you can see in this case, option 2 is most beneficial because in option 1, you are getting, if you are taking third house as deemed let out, the income would be 43640. If you are taking second house as deemed let out, the income would be 1840. So it is better than the first combination. If you are taking house 1 as deemed let out, then the income would be 19,800. You can see the maximum loss is 2 lakh. So 19,800, 1840 or 43640. Which one is best? This one. Because in this case, we have lowest income, 1840. Sure. Now you understood the concept. When there is more than two properties are self-occupied, then you need to find out which one needs to be considered as deemed let out. So you need to solve all your illustration, test your knowledge questions. I will upload the MCQ also, but these are very easy MCQ to just calculate the GAV. Just remember two things in the examination. When there is a question of house property, please identify which case does it fall. Either it's going to be solved as per case A or B, or D, E, G. They are same treatment, D, E, and G, or F. So there are technically 3 solution cases. A, B having the same, D, E, G same because we need to take the actual rent receipt. F is different. And if the property is more than 2 self-occupied, then this example illustration 8 is very important. You need to find out the value once as assuming all are self-occupied and once as they are deemed let out. Then you will be able to find out the correct combination. So student, if you have any query, you can ask, else we will go for a story, and that is my favorite story. And then we will see each other on 9th of July. 9th of July would be 9th and 10th would be the last classes. Ketan wants to ask something. Yes, Ketan.
Hello, good morning, sir.
Little louder, please. Little louder, please.
Good morning, sir.
Good morning.
Am I audible?
Good morning. Yes, but little louder, please. Yes, but little louder, please.
Sir, my doubt was, मैं पूछना चाहता था, हम लोग जब रिटर्न फाइल करते हैं, तो वो रिटर्न फाइल करते वक्त अदर हेड्स ऑफ इनकम जो आता है, उसमें से हम लोग जब हाउस प्रॉपर्टी का कैलकुलेशन करते हैं जीएवी का, तो जीएवी के वक्त ये सब कैलकुलेशन जो आपने अभी करवाया है आर्टिकल शिप में, मैंने वो सब कैलकुलेशन अभी तक देखा नहीं था, इसलिए मैं पूछ रहा हूँ तो कि हम लोग अगर कैश में लेते हैं रेंट, सपोज 20,000 कैश में लेते हैं और जीएवी हम लोग 15,000 दिखाते हैं ये जीटीआई कैलकुलेशन के लिए आर्टिकलशिप में। तो ऐसा क्यों हुआ, मतलब ये कैलकुलेशन?
देखिए मैं आपको बताता हूँ, एक्चुअली एक तो
देखिए
कैश
मैं आपको बताता हूँ, एक्चुअली तो कैश
कैश इज द डिफरेंट थिंग। जब आप शो नहीं
डिफरेंट
करते
थिंग,
तो
तो शो नहीं
टेक्निकली तो
करते
रॉन्ग,
तो टेक्निकली तो रॉन्ग,
इज लीगली रॉन्ग।
इज लीगली रॉन्ग।
जब भी हम कोई एक्ट पढ़ते
जब भी
हैं
हम कोई
या
एक्ट पढ़ते
पढ़ाया
हैं
जा रहा है,
या
तो
पढ़ाया
इट
जा रहा
इज
है,
जस्ट लाइक व्हाट
तो इट इज
द
जस्ट लाइक
एक्ट,
व्हाट
व्हाट इज प्रैक्टिकली इज हैपनिंग, दैट इज डिफरेंट।
इज हैपनिंग, दैट इज इट।
आर्टिकलशिप में या कहीं पर भी जब
आर्टिकलशिप
आप
में या कहीं
GAV
पर
में 15,000 लिख रहे हैं
15,000 लिख
तो वो
रहे हैं,
मार्केट वैल्यू
तो
बिकॉज आपको नहीं
मार्केट
बताई,
वैल्यू बिकॉज आपको नहीं।
इधर क्लाइंट ने नहीं बताई, या फिर आपके पास डेटा नहीं है, या स्टैंडर्ड रेंट नहीं आपके पास है, या फिर म्युनिसिपल वैल्यू नहीं गिवन है। जनरली ये म्युनिसिपल वैल्यू, स्टैंडर्ड रेंट और मार्केट रेंट एक्चुअल रेंट से कम ही होते हैं। सो फाइनली जो जीएवी में आप इंसर्ट कर रहे हैं वो एक्चुअल रेंट कर रहे हैं 15,000, तो ये एज्यूम करते हुए कि यही हायर है, बट टेक्निकली वो रॉन्ग है। उसमें हमें जीएवी एटसेट्रा फिल करनी चाहिए, बट वो प्रैक्टिकली क्या होता है वो बहुत डिफरेंट है। बट टेक्निकली द प्रोसेस इज यू हैव टू फिल द मार्केट रेंट, यू हैव टू फाइंड द म्युनिसिपल वैल्यू, यू हैव टू फिल द स्टैंडर्ड रेंट इफ एप्लीकेबल। आफ्टर दैट द जीएवी शुड बी देयर। सो कैश वाली बात को आप भूल जाइए, प्रैक्टिकली चीज अलग है और हम बात कर रहे हैं सिर्फ जो एक्ट के अकॉर्डिंग करना चाहिए। तो मैं आपको बस ये बता दूं कि जो आपको पढ़ाया जा रहा है होना एग्जैक्टली ऐसा ही चाहिए, बट ऐसा हो रहा है या नहीं दैट इज डिफरेंट। इट जस्ट लाइक दैट, झूठ नहीं बोलना चाहिए ना, सबको पता है ना झूठ नहीं बोलना चाहिए, बट बोलते हैं ना। योर डेली लाइफ यू डू दिस थिंग, वी डू दिस थिंग, सो इट्स अ डिफरेंट थिंग। बट एग्जाम में और रियल लाइफ में टेक्निकली हम बात करें तो आपको जीएवी ऐसे ही कैलकुलेट करनी है जैसे कि मैं आपको बता। अंडरस्टूड? चलो नेक्स्ट, एनी मोर क्वेरी? Let me tell you again, house property is easiest topic. After the class, revise the provision once and start solving all illustration or test your knowledge question. You will get it in like 1 hour. You will be able to understand the full house property. And a very good news is this: there would be house property question generally in every attempt for at least 4 or 6 marks. This is a kind of question you can attain full marks. If it is 6 marks or 4 marks, you'll get full marks, and it will take not more than 6 or 7 minutes to solve, because you just need to find out the GAV. If the question is like the illustration number 8, as we have discussed, then it would be 8 marks question. So again, that would be easy. So if there is a house property question, let me tell you, you would be able to get 100% marks in that house property question. Okay. So here is saying, I wish you remain our teacher for remaining sessions, and you made tax so easy to understand. You can give your feedback to BOS. So if they want, I'll be back again. You will miss. I'm not going anywhere. I'll be come back in July. Until that, you have to work hard. Please understand that you cannot uh, stop doing that. Work hard, focus. All faculties are good. Just try to understand the concept of the faculty, and then you can go through with the provision, revise the provision, solve the question. You will get each and everything correctly. चलो भाई, नाउ स्टोरी टाइम। बहुत ही अच्छी स्टोरी है, मुझे बहुत पसंद है, मेरी फेवरेट है। तो एक बहुत टाइम पुरानी बात है, बहुत टाइम पुराना। तो एक देश था और उसमें एक छोटा सा गांव था। उस गांव में एक छोटा सा घर था, उसमें एक बच्ची रहती थी और उसे पढ़ने का बहुत शौक था। उसके पेरेंट्स थे, उसके छोटे भाई बहन थे। प्रॉब्लम ये थी कि उस गांव में जो स्कूल था वो बहुत दूर था। तो उस बच्ची को सुबह जल्दी उठकर, खुद से तैयार होकर भाग के जाना पड़ता था, क्योंकि वो हमेशा लेट हो जाती थी घर का काम करने में। बट उसको पढ़ाई बहुत पसंद थी, तो वो दौड़ के स्कूल जाती थी। और फिर अफकोर्स जल्दी से आना पड़ता था घर पे काम संभालने के लिए, तो वो वापस भी दौड़ दौड़ कर आती थी। तो इस तरीके से डेली उसको काफी रनिंग करनी पड़ती। धीरे धीरे कर और फिर जब स्कूल में स्पोर्ट्स हुए तो टीचर्स ने नोटिस करा कि ये लड़की तो बहुत फास्ट भागती है। तो उसको एनकरेज करा कि तुम पार्टिसिपेट करो रेस एक्सेट्रा में। बिकॉज हो क्या रहा था, वो डेली ऐसे ही घर से स्कूल, स्कूल से घर जाती थी, तो उसकी रनिंग बहुत बेटर हो गई, इवन वो बॉयज को भी हरा देती थी। फिर जब कॉलेज का टाइम आया तो उसका कॉलेज और दूर था। अगेन कोई कन्वेंस नहीं था, तो वो वैसे ही वॉक करके और रनिंग करके जाती थी और आती थी। तो धीरे धीरे वो पूरे कॉलेज में पॉपुलर हुई, बिकॉज रनिंग में उससे फास्ट कोई नहीं था। एंड उस टाइम में, बहुत टाइम पहले की बात है, तो ये 4-5 किलोमीटर की मैराथन टाइप से होती थी। तो जब वर्ल्ड मैराथन और रेस होने की बात हुई तो उस कंट्री से वो लड़की रिप्रेजेंट करने गई अपनी कंट्री, और फर्स्ट टाइम था कि उस कंट्री से कोई इंटरनेशनल लेवल पर रेस में पार्टिसिपेट कर रहा। तो ये बहुत प्राउड की बात थी उस कंट्री के लिए, उस गांव के लिए, उस विलेज के लिए, इवन फॉर दैट गर्ल। वो फर्स्ट टाइम अपनी कंट्री से बाहर गए। उस टाइम पे जो रेस करने का तरीका था वो थोड़ा डिफरेंट था। मतलब स्टेडियम में 10 पार्टिसिपेंट होते थे। जब रेस स्टार्ट होती थी, सारे पार्टिसिपेंट्स स्टेडियम से जब बाहर निकलते थे तो सबके जो ट्रैक थे वो अलग अलग हो जाते थे। मतलब दे कैन नॉट सी ईच अदर। स्टेडियम के अंदर तक देख पाते थे, उसके बाद बाहर जाकर सबके ट्रैक अलग थे। सबके 5-10 किलोमीटर के थे, बट दे कैन नॉट सी ईच अदर। एंड वो कब देख पाएंगे? जब वो वापस से उस ट्रैक को खत्म करके स्टेडियम में एंटर करने वाले होंगे। देन दे कैन आइडेंटिफाई कि कौन आगे है कौन पीछे। रेस स्टार्ट हुई। सारे के सारे जो 10 पार्टिसिपेंट्स थे फीमेल, उन्होंने दौड़ना शुरू करा। स्टेडियम तक सब देख पा रहे थे कौन आगे पीछे है, बट स्टेडियम के बाहर निकलने के बाद उनके ट्रैक अलग हो। वो बच्ची बहुत मेहनत से दौड़ी, बिकॉज पता था कितने लोगों की उसके ऊपर एस्पिरेशंस हैं, कितने लोगों की उसके साथ चीजें हैं जो बहुत कनेक्टेड है उससे। तो उसने बहुत बहुत दौड़ लगाई, बट ये पता नहीं चल रहा था कि वो जीतने वाली है हारने वाली। तो ऐसे करके जब अपना ट्रैक पूरा करके स्टेडियम में एंटर होने वाली थी, तो उस रोड पे जहां बाकी सारे पार्टिसिपेंट्स भी दिखने वाले थे, उसको ना तो अपने कोई आगे दिखा, ना कोई पीछे। अब इसके दो ही रीजन हो सकते हैं। या तो वो सबसे आगे थी, या वो सबसे पीछे थी। तो उसको बहुत डर लगने लगा। शी वॉज फीलिंग रियली नर्वस कि मैं कहीं सबसे पीछे तो नहीं हूँ। स्टेडियम के पास जैसे जैसे जा रहे थे तो स्टेडियम में अनाउंसमेंट होता था स्पीकर पर कि किस किस कंट्री के पार्टिसिपेंट अंदर आ चुके हैं। एंड उसको वो सुनाई दे रहा था, एंड उसको सुनाई दिया कि उसकी कंट्री का नाम नहीं बोला गया, बाकी सारी कंट्री के नाम आ गए थे पार्टिसिपेंट्स के लिए। तो उसको अब लगा कि वो सबसे ही एंड में है। ये बात कंफर्म ही हो गई, बिकॉज उसका नाम नहीं था। उसको होपलेस हो गई, उसको लगा शायद मुझे क्विट कर देना चाहिए। बट उसको रियलाइज हुआ कि नहीं, अपना बेस्ट तो मुझे देना है। मैं जीतूंगी हारूंगी दैट्स अ डिफरेंट मैटर, बट मैं अपना बेस्ट अगर नहीं दूंगा या नहीं दूंगी तो ऑफकोर्स फिर मैं अपने लिए हमेशा गिल्ट फील करूँ। तो उसने पूरी जान लगाई और दौड़ना शुरू करा। स्टेडियम के अंदर जब वो पहुंची तो उसने देखा कि दूर जो स्टेज थी, उस स्टेज पर सेरेमनी भी स्टार्ट हो गई थी। मतलब मेडल मिलना शुरू हो गए थे जो पार्टिसिपेंट जीत चुके थे। अब उसे श्योर हो गया कि वो हार गई एंड शी इज लास्ट। बट स्टिल वो रुकी नहीं, वो दौड़ती रही अपनी पूरी ताकत से। एंड उसने अपनी फिनिश लाइन जब क्रॉस की, सब लोगों ने उठकर ताली बजाई। स्टेडियम में सारे लोगों ने उसके लिए क्लैप किया। और शी वॉज सरप्राइज्ड कि ऐसा क्यों हो रहा है। पता चला शी वॉज द फर्स्ट वन। जो स्पीकर पे नाम अनाउंस हो रहे थे, वो उससे पहले जिन लोगों की रेस चल रही थी उस कंट्री के लोगों के नाम अनाउंस थे। जो सेरेमनी चल रही थी वो भी पुरानी रेस जो हुई थी उसके लोगों को मेडल मिल रहा है। तो उसकी रेस में से शी वॉज द फर्स्ट वन हु कंप्लीटेड द रेस, और वो उस रेस को जीत गई। तो क्या आप जानते हैं उस बच्ची का नाम क्या था? एनीबडी नोस? ये स्टोरी किसके बारे में है? ये एक रियल लाइफ स्टोरी है। क्या आप जानते हैं वो कौन है? Who was that girl? Daksh is saying, unfortunately, no, sir. Anyone else? कोई गैस करना चाहता है? Who was she? Sushmita is saying PT Usha. Anyone else? Mayak is saying no. मैं गैस ही नहीं करना चाहता. Very good. Very good. At least guess. Take a guess. So let me tell you. Pooja. Masala Devi is saying PT Usha. Surinder is saying PT Usha. Ketan is saying Ruth. Pooja Singh is Pasala Devi is saying. So let me tell you. एक्चुअली ये रियल लाइफ स्टोरी है ही नहीं। ना तो ये पीटी उषा है, ना ये कोई और। ये रियल लाइफ स्टोरी नहीं है। इट्स अ फिक्शन स्टोरी, मैंने बनाई है खुद से। बट फिर भी ये रियल लाइफ स्टोरी है हम सबकी लाइफ। उस बच्ची का नाम सुरिंदर भी हो सकता है, बसाला भी हो सकता है, महक भी हो सकता है, अंकित शर्मा भी हो सकता है, केतन भी हो सकता है। हम सब वही हैं। हम सीए में भी वही करते हैं। हमारी रेस चल रही है। बट आपको ये समझना है कि कोई कंपटीशन नहीं है। हम सबकी अपनी जर्नी है। कोई जल्दी सीए बनेगा, कोई लेट सीए बनेगा। मेन चीज क्या है, वो फिनिश लाइन खत्म करनी। एक टाइम ऐसा आएगा जब मे बी आपको लगेगा आपके दोस्त आपसे पहले सीए बन रहे हैं, आपका फाउंडेशन नहीं निकला उनका निकल गया, आपका सीए इंटर नहीं निकला उनका निकल गया, तो मे बी यू विल फील होपलेस। वो नहीं करना। अपनी अपनी रेस सबको खत्म करनी, पहले या बाद। इसे कंपटीशन की तरह मत लो, इसे एक जर्नी की तरह लो, और सबको अपनी जर्नी पूरी करना। जब मेंबरशिप सर्टिफिकेट मिलता है ना, तो उसमें लिखा नहीं होता कि दिस इज सीए इन फर्स्ट अटेम्प्ट, ही और शी बिकम सीए इन फिफ्थ अटेम्प्ट, इसको इतने साल लगे सीए बनने में, इसको उतने साल लगे, ऐसा नहीं लिखता है हमारा इंस्टीट्यूट, क्योंकि कोई कैटेगराइजेशन है ही नहीं। वी विल बी अ सीए लेटर और सूनर, एंड कोई डिफरेंशिएशन भी नहीं करता हमारा इंस्टीट्यूट। अंडरस्टूड? तो ये एक जर्नी है, और ये सबकी लाइफ की है। जब हम दूसरे के साथ कंपटीशन मानकर उसको करते हैं कि मेरे 2 अटेम्प्ट में नहीं हुआ, उसका हो गया, वहीं पर हम हारना शुरू कर दें। तो उस चीज को कंसिडर मत कीजिए। अपनी लड़ाई, अपनी जर्नी, अपनी रेस कंप्लीट करना मैटर करता है। किससे पहले और कोई ना कोई तो बाद में बनेगा, कोई ना कोई हमसे पहले बनेगा। बट उस चीज को अगर आप अपने ऊपर एज अ बर्डन लेंगे, तो बहुत इश्यू हो जाए। पता है फेलियर से भी बुरा क्या होता है? द डेंजरस थिंग मोर देन फेलियर इज द फियर ऑफ फेलियर। ये जो फियर ऑफ फेलियर है ना, इससे बाहर नहीं। मतलब एग्जाम टाइम में हम सोचते हैं रिजल्ट की, इवन अभी भी बच्चे अपने काफी सारे सोचते हैं रिजल्ट का क्या होगा। तो रिजल्ट का सोचेंगे एग्जाम के बाद। अभी सिर्फ एक काम है प्रिपरेशन करने की। अभी एग्जाम का भी मत सोचो, अभी सिर्फ पढ़ाई की सोचो कि मैं खत्म कैसे करूंगा सिलेबस, चैप्टर कैसे खत्म करूं। मेक योर शॉर्ट टर्म गोल्स। जब एग्जाम तक टेंशन नहीं होगी, अभी पढ़ाई अच्छी करोगे तो एग्जाम अच्छे होंगे, एग्जाम अच्छे होंगे तो रिजल्ट अच्छा होगा। अभी से बैठ के जो बच्चा रिजल्ट की एग्जाम की सोच रहा है, वो गड़बड़ देगा। फॉरगेट अबाउट इट। जस्ट पुट योर एवरीथिंग इन योर स्टडीज राइट, and just believe in yourself. This fear of failure is more dangerous than the real failure, and you will not be fail if you are going to finish the race later or sooner, does not matter at all. Okay. थैंक यू महक फॉर योर गुड वर्ड्स। आप एक्सीलेंट पढ़ाते हो, से तो वो जानती थी, बट आप रियल आइडल टीचर हो। थैंक यू, थैंक यू। वी विल मीट वन डे स्टूडेंट्स। सीए बन जाओ जल्दी से, फिर मिलेंगे। ओके। मिस मैक, ओके। इनकम टैक्सेस सब इजी है, जस्ट गो थ्रू विद द प्रोविजन, रिवाइज करते रहो, और बस डू नॉट लूज होप एंड डू नॉट स्टॉप वर्किंग हार्ड। पढ़ते रहो, आराम से सी हो जाएगा। चलो, एनीथिंग एल्स यू वांट टू आस्क स्टूडेंट्स? एल्स आई एम गोइंग टू से यू ऑल बाय एंड ऑल द बेस्ट। डू स्टडी वेल। वी विल सी ईच अदर इन जुलाई एट योर लास्ट क्लासेस। Thank you so much for your nice word. You can give your feedback to the institute. I guess there's a feedback form somewhere. See, Banjao, Ketan, we will meet. Don't worry. So there is no query, I guess. Ashok sir, can we close the session? Goodbye, students. Take care to all of you. All the best. Yes, yes. Over, Ashok sir.